Good day, ladies and gentlemen. This is Barry Norman, the Education Director for Option Rally. I hope everybody's having a great weekend, and I'd like to welcome you to our class, Welcome to Binary Options. Now, this class is part of our trading camp and is one of a series of 3 webinars that we offer to all traders free of charge to help you get a better understanding of what binary options are. The classes are available they're all freestanding, so it means you can take them in any order you please. Today's class is the first of the 3 classes, and it is called Welcome to Binary Options. The second class is called Getting Started with Binary Options, and the last class is called Mastering the Option Rally Trading Site. Like I said, all 3 of these classes are available at all times free to our traders or our potential traders, and can be taken in any order in which you please. Now, binary options are an easy-to-trade, high-profit, minimum-risk investment. So let me break down that statement so you can understand exactly what I'm trying to say. Easy to trade. Binary options only require 4 steps and 4 decisions in order to make a trade. The first thing you have to decide is what asset you want to trade. And on the binary options platform, you can trade commodities, currencies, indices, and stocks. Now, of course, you are trading in the live global market, so you can only trade those assets that are open to trade on the exchanges around the globe at that time. Like, for instance, this morning, there are no trades to be made because none of the exchanges around the globe are open. In a short while, some of the Mid-Eastern exchanges will be open, and for a couple hours on Sunday, there are a limited amount of assets. Forex, or currency, can be traded virtually 24 hours a day, 5 days a week. There is no currency trading on Saturday or Sunday. Commodities trading is the same thing. You can trade it 24 hours a day, Monday through Friday, as the global exchanges are open. And we use, it's got to be commodities that are traded on global exchanges. Like, you can't trade peppers, because peppers are traded on regional exchanges that have very, very big price differentials between the local and the regional exchanges. But things like gold, crude oil, cotton, coffee, things that are traded on the international market at a standardized price are available to be traded. Now, commodities are defined as anything we can consume, anything from pork bellies to livestock to agricultures to heat to precious metals, industrial metals, all of those things that we use every day. You can also trade stocks. Now, you can trade stocks from all the major exchanges around the world, but only when those exchanges are open. So, first you decide what asset you want to trade. Then you make a very simple decision. Is that asset going to go up or down? That's the only decision you're making. We don't care how far up or down it goes, as long as it goes in the direction in which you said it was when you picked your trade. So in other words, you say gold is going to go up, and gold is trading at 1250, and you say gold is going to go up. As long as gold goes up to 1250.001, okay, you make the same amount of money that if gold went all the way up to 1300. All it has to do is go in the direction in which you picked before you started making the trade. So if you said gold was going to go down and it was at 1250, as long as at the conclusion of the trade gold was below 1250, it doesn't matter if it's 1249.99 or 1100, you make the same amount of profit. Your profit is predetermined before you enter a trade. When you go to a trade screen, it's going to tell you exactly how much profit you will make if the trade goes in your favor. The average binary options trade pays about 80%, and most trades are done in what's called the now, which is the next 15 or 20 minutes. That means you can take $100 and actually take that same $100 and trade it 3 or 4 times an hour, each time making 80%. So that's pretty high profit. Now, minimum risk. The only thing you are risking when you trade a binary option is the dollar amount you type into the screen. This is not a deposit or a premium that you have huge risk on. The only risk you have is if you decide you want to invest $15, that's it. It's the only amount that you could possibly ever lose. It's your total exposure. There is no leverage. There's no margin. Everything is as you see it. First you decide which asset, you decide if it's going to go up or down, decide how much you want to invest, and the last thing you decide is this going to happen now or later? Now 85% of all binary options trades are done in what's called the now, which is the next expiry, which is usually in about 15 minutes. Sometimes 20 minutes, sometimes a half hour. It's preset, and you can select the close. But why would you select a different close? Well, say, for instance, you think gold's going to go up at the end of the day, or there's an event happening and you think it's going to push gold up or down. You can select to close your trade after that event has taken place. Now, investment. Anytime you invest a small amount of capital and use some knowledge, some know-how, some experience, and a wee little bit of luck, and turn it into a large amount of capital, or that's your intent, that's investing. Whether you're buying a business, whether you're buying some real estate, whether you're buying gold, whether you're buying jewelry, whatever you're doing, you're buying a piece of artwork, and your artwork is, you can buy artwork to decorate your house, or you can buy artwork of an investment. If you're buying it as an investment, why? You're hoping it will have a higher value when you go to sell it. Okay. Same thing with a business. All of these things have the same reason. They're investing. Now, binary options are one of those things that if you know how to do internet shopping, you understand how to find information using Google or a search engine, you know how to use a computer fairly well, and you're comfortable doing online banking, you will be perfectly fine. Everything you need to do and everything you need to master and all the data you need to find is easily available these days in the internet free of charge. Now, binary options are easy to follow. You just follow these 4 little steps. You start out with the asset. You determine if that asset is going to go up or down. You decide when you think this will happen, now or later. And you decide how much money you want to invest. That is it. Those are the only choices, only decisions you have to make. It's the only thing you can make. This is it. This is the entire process of facing a binary options trade. You know your profit before you make a trade, and you know what your risk is. So normally I would take you at this time to the Option Rally trading floor, but on Sunday there are no trades available. So I've got a screenshot for you, and we're going to talk about, I'm going to show you how this is. What you're looking at is a screenshot of our trading floor. This is as simple as it gets. There is nothing complicated. First you select your asset, and all the available assets are available here by clicking on the drop-down menu. Whatever assets are available at that time, and you'll see all the currencies, all the commodities, all the stocks and the indices. Then you pick your expiry. Okay. It automatically will default to the next available expiry. If you decide you want to trade it later, and why would you pick later? Say, for instance, crude oil fell all the way down to $90 or $89 like it did a couple weeks ago. That's a very, very low. That's a freaky low for crude oil. Well, you could trade it to close a week later when the markets return to normal, because you know it's going to go back to its average somewhere just under $100. So you can trade it to close later. Lastly, decide how much you want to invest. Okay? And you simply type it into the screen. Then you have to make your important decision. Now you can see here, we invested $12. It's going to pay us back $20.64. Our payout is 72%. This is already on the screen before you've ever entered your trade. You know exactly what it's going to do. So if we decide that the Tadawul, which is the Mid-Eastern Exchange, is going to climb, we just simply click on the call button, or look for the up arrow. We don't have to understand what the word is. We're just looking. We decide it's going to go up, we click on the up arrow. We think it's going to go down, we click on the down arrow. That is it. Everything is predetermined. So if you decide you want to invest $100, you're going to see this number here, the potential payout changes to $172. The 72% doesn't change. All this is doing your calculations for you. The only risk and the only exposure you ever have is the number that you type into the screen right here. That is it. And this is all that there is. There's nothing else. There's no other screens. There's no other things to do. This is how you trade. We have the current charts up here. The charts are flexible. You can click on the time frames in which you want to see the charts. We also offer advanced charts and basic charts on the platform, so you can do some trending. You can put some lines of support and resistance. You can do whatever type of analysis you want. The bottom bar here, called the Trader's Choice bar, tells you what the other traders who are trading this particular asset are saying or trading, in which direction go. And at this point, On the title wall, right now, it doesn't help you much because it's 50-50. 50% of the traders making a trade in this asset think it's going to go up, and 50% think it's going to go down. So it doesn't help you much, but it does help you know where everybody else is thinking at that moment or what they're trading on that particular asset. But that is it. There are no other choices or decisions to make. Okay, I'll show you this again. Let me clean this up. This is oil. Okay, boy, this was in December when I put the screenshot up. But oil was trading at 92.45. We can see the current price. It was going to pay out 77%. If we invested $10, it would pay us back $17.70. And if we think it's going to go up, we click on the call. We think it's going to go down, we click on the put button. It's just that simple. There is nothing else. There is no complexity here. It's a very simple way to trade. You're simply deciding if this asset is going to go up or down, above or below the current price in the market. This price is called the strike price. So when you enter a trade, you're striking it at that price. If you say it's going to go up, it just has to be up. We don't care if it goes up from 92.245 to 92.246. You are in the money and you will get that same 77%, even if it spiked all the way back up here to the $90 range. You still get the same exact amount of payout. The same money. You don't get any more. So all you care is it's above the strike price at the close of your trade. It is just that simple. That's all you have to decide. Is it going up or down? Now, you start out with a 50-50 chance because it's just like flipping a coin at 50-50. You know 50% of the time it'll be heads, 50% of the time it'll be tails. Now, you just have to apply some knowledge, some know-how, and some experience to move this in your direction so that it will more often be correct than incorrect. Now, binary options are also sometimes known as digital or fixed return options. Fixed return options is because your return is fixed before you make the trade. They are a simple yet exciting method of trading in the financial markets based on the determination of whether the price of an asset will close above or below the current price within a set period of time. Just as I've been explaining to you all along. Binary options trading is based on speculation of prices driven by recent economic events. Trading in binary options involves high volatility movement and limited risk of loss, but it does have risk of loss. So that means you should always pursue a responsible and disciplined approach to the markets using risk capital. What is risk capital? Risk capital is money you can afford to lose. So what I'm saying is, don't call me on the phone and say, Barry, we'd like to deposit $1,000, but it's our mortgage payment for next month and we need to have it back. That's not risk capital. Okay. What you are looking to trade is money that you have put aside that you can slowly use that's for an investment, that you can slowly learn to trade properly, that you can slowly make profits on. Okay. And so if you came to me and said, Barry, I'll give you $1,000, but I need to make $1,500 back by the 15th of next month so I can cover my mortgage, can I do that? I'm going to say, go away, please. If you're saying, Barry, I'm going to deposit $1,000 and I'd like to make my Christmas shopping money for next year, is that possible? I'll say, yes. Just trade slow, come to class, learn, experience, get knowledge, and then you can start making better trades and more successful trades. And once you have some trading strategies under your belt, you'll be able to make more trades. But you shouldn't come here under pressure to perform. So I'm going to try to explain to you what binary options are using what I call the story of three houses. This is what the most difficult thing people grasp is what actually is a binary option. So at the end of your street, there are three houses. Imagine that. On the end street, there's three houses. They're all identical. Same square pieces of property, same houses on the property, built at the same time, painted the same color, in the same condition. Well, you walk into house number one, and it's your buddy Bill, who's the real estate agent. You say, Bill, I'd like to buy the house. Bill says it's 99,000 euros. You say, fine. You shake your hands. You agree to it, and then all the lawyers, the attorneys, the solicitors, the brokers, the appraisers, everybody goes to work. They check the foundation, they check the condition of the building, they check the deeds, they check the tax status. And at about 30 days down the road, everybody shakes hands, everybody's agreed on everything, and you pay the 99,000 euros, you get the deed to the house, and everything is perfect. Okay? Well, imagine that's more like the stock market. In the stock market, you buy shares of a publicly traded company. You know what their profits are. You know what their investments are. You know what their total assets are. You know how many shares were issued. And actually, when you buy the shares, they are issued in your name. And years ago, and you can still sometimes get it done, they will actually issue physical shares that your broker can send to you, and that you can put in your safe deposit box. You can hide them under your mattress. You can borrow against them. You can leave them to the kids in your will. You can do as you please with them. They are an asset, just like the house. You own it. It's yours to do as you please. So that's ownership. Then we come to the way that the commodities and currency markets operate. And here, you're not actually purchasing and taking delivery of assets. You are tying up an asset with and what you're getting is a contract for the right to purchase or sell that asset at a certain time at a specific price. Now, you don't own that asset, but you do have the rights to purchase it. Okay. So what's the difference? Since you're not taking physical delivery and actually taking possession of the asset, most brokers will allow you to put what's called a premium or a deposit down to tie up that asset. So in other words, crude oil is traded at one contract of crude oil is 1,000 barrels, which is 42,000 gallons of crude oil. Now, because crude oil usually moves no more than a couple cents a day, okay, if it's really erratic, it's a hot market, maybe 50 cents a day. So that's a whole shift in that contract of about $500. So your broker will allow you to buy that contract or tie up that contract for $500. Because what they're concerned about is the value of the current oil compared to what you had purchased it for. Because they need to be whole at all times. And the leverage margin and the premium costs are set by the Commodities and Exchange Boards. But your broker can set the leverage as within a period of a point of approval. Now, say for instance you tied up that one contract of crude oil. You put down a $500 premium. You're sitting on crude oil today is trading at about $99. In fact, it was just hit 100 the other day. So let's use $99 for easy numbers. $99 times 1,000 barrels. Crude oil is trading at you're tying up $99,000 of an asset. Okay, but you only put down $500. But if crude oil happens to drop $1, you've lost $1,000. Now, you haven't closed out the contract, but your broker's calling you on the phone saying you need to put another $500 into your account because you have to cover the difference. Or I'm going to close your position, and you're just going to have a loss of $500, and you're still going to have to pay me the $500. Now, it's a complicated way to trade because you have to place what they call a stop loss. But you've got to protect yourself because you can't risk that something happens in the market. And crude oil has been known to drop $3 in a matter of minutes. And you can't afford to take a $3,000 loss. So you set your stop loss where the maximum you can afford to lose, and you put a stop loss at $98.50 because you can only afford that $500. Well, crude oil dips during the day and drops all the way down to $98.42. Your broker does what you did, you said to do, close out your trade at $98.50, close out your trade at $98.50, wipes off your $500 board, and 2 hours later, crude oil soars up to $102. Well, it's up $3 for the day, but because you couldn't afford the risk of loss, your trade was already closed, and even though it did exactly what you thought it was due, you never made any money. You had a loss. It's a very complicated trade. But it's a very good way to trade. You can make lots of money, make huge amounts of profit with small investments, but you have to be able to cover the risk. You have to know exactly what you're doing. You have to know exactly where to take profit. You have to know exactly where to take your risk. You need to cover your commissions, your spreads, and everything else. But it is a great way to make money if you're a knowledgeable trader and have a large enough portfolio or a dollar amount in your account that you can cover these swings in the market. Now, binary options, on the other hand, takes the best features of ownership and Forex trading and combines them in one easy package. You can buy gold, oil, the euro, the dollar, as well as most popular stocks and indices through binary options trading. You can even buy Google, Twitter, or Facebook. Now, you only make 4 decisions. because there is no risk of higher loss. You don't have to have a stop loss. If you type in $100, or you type in the $500 you did with crude oil in the other trade, now granted, you're not going to make a possibility of $3,000. You're going to make 80%. So it means you'll make a profit of $400, but you also have no other risk, no other exposure. It just simply means if crude oil goes up 1 penny, you make your $400. And then you sit back and wait for the profits. Okay. Now, so binary options is like renting an asset for a period of time. Now, I explained the commodities in the Forex market is like leasing a house to buy. You walked into house number 2, and you said to the real estate agent, I'd like to buy this house. And he says, it's 99,000 euros. You said, that's cool, but I don't have the 99,000 euros till next year. He says, I can't tie up the house for a year. I can't take it up the market. He says, I'll tell you what, I'll talk to the owner, and if you give us a 2,500 euro premium, we'll take the house off the market. And you got to take care of the upkeep, the taxes, the maintenance for a year. And exactly 1 year from now, you give us our 99,000 euros, the house is yours. You shake hands, you agree. It's a complex transaction. Okay. And it's actually 2 transactions. It's a lease and a purchase. It requires an extra amount of capital that you're giving up front. It requires a lot of risk because you have to have that 99,000 euros on that day down the road. Now, also what happens, though, is it could be very profitable because the real estate market boomed. That house is now worth 119,000 euros, and you never close on the house. Your buddy tells you he'd buy it from you for 115,000 euros. You say, cool, give me the other 16,000 euros, give the owner 99,000 euros, I'm going to walk away with my profit and go look for another house. And you walked away with a 16,000 euro profit. But on the other hand, if the real estate market tanked, okay, and the house was only worth 89,000 euros, you still have to give the seller 99,000 euros, which you agreed to a year ago, or you have to take a loss of your 2,500 euros plus your upkeep, your maintenance, and taxes for the year. But on the other hand, you know what? You were looking to buy that house to live in, so it's fine. Okay. It's a good way to trade, but it's like what I explained is a lease option to buy. And binary options is like renting an asset for a period of time. You have limited risk, limited responsibility. All your decisions are made up front. And it's a small investment. You walk into house number 3, and you say to the real estate agent there, I just want to rent the house. He says, here's a 1-page document, sign at the bottom, give me a check for 500 euros. You can move in tomorrow. Here's the keys. Okay? It's just that quick and easy. You say to him, well, I'm not paying taxes, upkeep, and maintenance. He says, fine, that's not your responsibility. He says at the end of a year, you can renew that lease. You can do whatever you want. You can move out. You can end it. It's yours. Just pay me the 500 euros the first of each month. Everybody agrees. Everybody's happy. And now what you have is three assets, all identical, all at the same price, but they're all handled with different types of financial transactions. So you have the first house that was owned, which is like the stock market. You have the second house, which is a lease to buy with a small deposit and a long-term commitment and a lot of risk and a lot of probabilities. Okay. But it's still worth the same 99,000 euros as that first house. And then you have the rental. The house is still worth the 99,000 euros, but it's an easy transaction. You were able to buy it, or actually rent it very quickly for a small deposit, move in there, and your only exposure is your your monthly rental fee. That's it. In a year, you're over with it. So what do we have when we invest in the market? Whether we're buying euro or gold, it's the same euro or gold moving in the same directions at the same price, just different financial applications. So in other words, if house number 1 was the euro, and the euro was trading at 135 to the dollar, okay, the euro is trading at 135. You want this asset, and you want 135 euros. I'm sorry, you want 100,000 euros. You have to go into the bank and hand the teller $100,000. He'll give you 135,000 euros. I'm sorry, that's backwards. You got to hand the banker 135,000 euros, and he'll give you $100,000. Nope, got it backwards again. Okay, you give that banker $135,000, and he's going to hand you 100,000 euros. Okay, now you can take those euros and put them under your mattress. You can put them in your safe deposit box. They're yours. If they go up and down in value, you don't care that much. It's still on your mattress. It's only when you go to use them that it makes a big difference. Now, if you went into the commodities market and you bought those euros, or in the currency market and bought those euros, and you did them through a lease or a options trade, you'd have to put down $500. You tie up the 100,000 euros, and it was still trading at 135, but you only put down $500, and you're still tying up the same 100,000 euros as the guy over next door. He's got them under his mattress. He owns them. He can do with it he please. You have leased them, and you have time ticking down because you've got a contract to get those euros over a specific period of time. Now, if the euro goes up in value, you could sell that contract and take the profit. If it goes down in value, you have to cover that. In binary options, you've rented that same euro for the 135 against the dollar. It's the same price, the same type of transaction, except you've only rented it for a short period of time. And all you have to do is, in that period of time, whether it goes up or down in the direction in which you said it was, it's a simple transaction, same euro. So regardless of what happens in the market's affected, the price remains exactly the same no matter which type of transaction you're going. What changes is your risk, your capital, your exposure, and the complexity of the trade. And what binary options is, it's the easiest type of trade that you can make. Now, when you enter the world of binary options, you are entering the global markets. Binary options allows you to trade assets from almost all the exchanges around the world. Binary options are traded live. You are actually trading and receiving real-time data from the global markets. You can trade virtually from anywhere around the globe that has an internet connection. You can trade using just about any phone, tablet, or smartphone or computer. Option Rally allows you to trade anywhere at any time. This is the perfect place to develop your skills, abilities, and knowledge before jumping in the deep end of the pool. So, if you decide you really want to trade in the Forex market, or you want to trade in the commodity, or you want to trade precious metals, that's fine. But why not come here where the investment is small, the risk is low, all the stuff works together. The assets move together. The puzzles of how all the finances of the world work are exactly the same. Why not come here where the risk is small, and for a small deposit you can be treated like a king? Then if you go over to a Forex broker and put in $500, he's going to laugh at you. He's going to know as soon as you make your first trade, he's going to be calling you on the phone. But you'll get a junior rookie account manager who doesn't have the time for you. And all he's going to do is be pushing you to add more money to your account. Okay. Then nobody's going to train you. They're going to leave you hanging out there because you haven't qualified for any of the programs. Where in binary options, you'll be considered a very large trader. You'll be given access to all of our free education, all of our account support. You'll have a one-on-one trainer. You'll have an account manager. You'll have everything you need to help you get to understand the markets. And then you can jump off later and go into the higher risk, high profit markets. So now if you know how easy it is and you're ready to get started, you can make a deposit today. And you're invited to our other binary options trading camp classes. But that is true whether you make a deposit or not. But once you do make a deposit, you'll be invited to all of our education classes. Okay, we have class every week on a new subject that we'll teach you about. We'll teach you strategies. We have live market trading. We have live event trading. You'll be invited to all of that once you've made your deposit open account. You'll get a one-on-one trainer who will do personal training. You'll be assigned a mentor who will help you all along the way to help you learn how to make profitable trades and teach you the basics of global markets. Now, you can reach us very easily on our website at www.optionrally.com. You will find our live chat button wherever you see this pretty lady with her headset. Just click on her. You'll be connected to somebody in our office who will help you right away. These are live people in our physical offices, not some computer call center somewhere. Or you can call any of our local numbers. Okay. This is just a selection right up here. If you go on the website at www.optionrally.com and click on the Contact Us button at the top, it'll show you all the local numbers for yourself. Now, don't forget, we are one of the few regulated brokers that are approved by the Securities and Exchange Commission. We are licensed by SISC, regulated by SISC. Okay, so that means that, number one, we have to deal transparently. We are under the rules and regulations of the European Union. And it also means all of your money is protected. Number one, it's segregated from all other funds. Number two, it is insured by the EU up to, I believe, it's 20,000 euros. Okay, so make sure you always trade with an approved, licensed, regulated broker. And the easiest way to get an account open is just wait about 24 hours from now, and someone from our office will call. Just answer the phone, talk to them. Even if you're not ready to start, they'll give you some answers. And they'll also be asking you how the webinar was today, and I appreciate it greatly if you could give us an honest answer. If you see there's any shortfalls, you think I should explain something better, please let us know. It's the only way I can do a better job for you is if you share your information with us. So on that note, I'd like to stop and thank you very much for coming to our Option Rally webinar. Now, if you want to sign up for the other classes in our trading camp, if you just go to www.optionrally.com, click on the Education or the Academy button, let it drop down to webinars, you'll see a whole calendar for the free webinar page. Pick the date and time you want to come. Open up the little box. You'll see a link in there. Click on that link and it'll get you registered for that class. You can also see all the other education classes by scrolling down to our education class calendar. You can see all the classes we'll be offering in the month of February. So, and on that note, I will thank you very much for joining us and have a wonderful trading week. Bye now.